Good morning, ladies and gentlemen. How is everybody doing today? Hopefully, you guys are all having a good morning and are ready for a better trading day. And to be truthfully honest, there isn't a whole lot moving around in the market today. Feels like we've been on this kind of couple-day streak of slowness. Though the market's been moving pretty volatile to the downside, we haven't really gotten any too crazy of moves, it seems like, but we'll see. So anyways, we'll get going here in just a few minutes as some more people start strolling on in. Lost one, good morning. How's it going? Good morning, guys. RT Bird, cool bro. Hello. So yeah, a couple things to maybe take a look at. So I will honestly say though, for today's trading day, there isn't a whole lot that I looked at that I felt really crazy about trading. So how I trade today, we'll see. I might just stick with a couple main stocks, like maybe just watch Roku. What I'll probably end up doing is watching the mains, which will be like Nvidia's, Facebook's, Apple's, like that. And then whatever kind of pops up towards market open on the scanners, then maybe I'll pay attention to those. But for today so far, really nothing really sparks my interest for the most part. Yeah, so I wanted to make a video on the ongoing repos, but I haven't done so yet. But I mean, it's not good. I mean, without a doubt. I mean, I've been saying it for a while. To be prepared, to start preparing for recessions or economic downfalls. More or less than not. I mean, I wouldn't really say more people have called me an idiot than people have called me correct. I'd say it's been about 50-50. More people, everyone's kind of on the side, yeah, it's going to happen. Then other people are like, you're an idiot, it's never going to happen. So, which is fine. It's completely fine. Doesn't even matter, right? So the idea is just to be prepared. And because the closer you get, things are going to start to show. Cracks are going to start to open. You're going to start to see the truth. And that is just that we just constantly repeat the same mistakes, and that is we go into market bubbles, and then the bubbles pop and they crash because of some underlying factors that can no longer continue sustaining their own selves, which would be like the banks. So yeah, the Federal Reserve is in bailing out the banks recently, which nobody's really talking about because it doesn't seem like it's such a big idea because it's already happened before, right? These things have happened before, so hearing them again, they're like, oh yeah, the banks are just doing it again. Yeah, I mean, yeah, it's a big deal that the Federal Reserve has to continuously bail out the banks on their overnight lending. That's a big problem. Anyway, what are my thoughts on it? I mean, there's really nothing much more than that. It's just even the big banks aren't even in control of themselves. They don't even have enough money. And that's the scary part, is they don't even have enough money. So if we do go through a really bad economic cycle, wouldn't be surprised to see if more banks go out of business. Yeah, it's very, very possible. Good morning, Josh. Roku, not going to really touch much there. I mean, if we're looking at Roku, it's pretty much in the same position it's been for the past couple days. We're really not having strong bounces. Each buy day keeps getting knocked back down, so people are continuously selling into the tops of green days. So we're still struggling to really bounce. And if we don't bounce here soon, we're going to go for another leg to the downside. Good morning, Snapchat. Well, I haven't seen Snapchat in a long time. Let's take a look. It's still doing well. Yeah, Snapchat has had a really good year, actually. Wow, I didn't even realize Snapchat got all the way down to $4. Wow. Yeah, from 4 up to 18, down onto some support. Breaking through to support. I would probably remain short bias on Snapchat for the time being. Yeah, maybe down to closer towards 14. And part of the reason why is if you look at the daily chart, there's a divergence on it. I mean, we had a high here at 1836. We busted into pretty much a new high here up to 1820s, 1815, and you can see it just complete the volume or the the momentum just completely fell off. So right now I'd probably remain more on the short side for that. Good morning from Greece. Yeah, watch list. Shane, really, there is none. Everything looks like garbage this morning to me. Maybe when I get back online, we could look at something else. But for now, nothing much. BBBY, Edward, BBBY did report earnings, but it's pretty much just a choppy. So that's another thing. If you look at BBBY's earnings, there isn't really unless something's changed. No fluent movement to that stock on their earnings here. So I mean, just like it's very choppy, very grindy. So unless this really wants to pick a direction, I'd probably stay away from it, because if it's already doing this sort of trading game, then you'll probably have something very similar when market opens. You'll probably get a quick spike one way or the other, and then after that, it's going to turn into more of a choppy, grinding stock. That's what I've come to find a lot of times. So based just on the way that it looks now, I will most likely avoid that stock in the day. DWT, so you're looking for DWT to continue, which means you'll be looking for oil to continue up. So if you go look, so yeah, if you want DWT to continue, right, you'd be looking at the oil futures. Or it would be the other. Yeah, so if oil continues to, if oil futures continue to decrease, then you're most likely going to see DWT continue. So it really doesn't, DWT has nothing to do with DWT continue. DWT continuing up all has to do with oil continuing to drop. So I guess really what you need to do is go look at, Now you need to go continue to keep an eye on the oil market, and as oil continues to, as oil continues to decrease, then DWT would go up. Now you can't argue that right now DWT is at close to a short-term resistance, which it is, but again, any resistance and any support on an ETF chart doesn't really matter, because it all comes down to the actual futures market. AMD, I'd probably watch today's short buys, just like we were yesterday. I'd probably remain short buys on it. Super Snake, I did see Tesla sell off today because of them missing their estimate of 100,000 deliveries. They reached like 97,000, so they pretty much hit 97% of their deliveries. If you look at it, they say our estimate was 100,000, but we only delivered 97,000. So what you're saying is you delivered 97% of what you said you were going to do, which is really good, honestly. NIO, I don't watch NIO. The stock moves way too slow. It moves in terrible ticks, so I don't trade that one. But I know that it's gotten beaten down very bad over the past 2 years now. My webcam is big. Oh, yeah, excuse me. I forgot to make this smaller as we were going over some stuff. I apologize about that. I know what the TTM squeeze indicator is. Yep, I actually have, I know what the TTM squeeze indicator is. Absolutely. And that's the other thing is, so Mike, I mean, I have been looking into real estate, definitely, but again, it's still hard to pull the trigger knowing that housing prices are most likely going to decrease right around the corner. So it's like, I might as well sit around, continue just to kind of save up cash, and then when the market gets a little bit bearish and home prices decrease, that would be the time to start buying into them again. Again, it's probably, it'd be impressive if it was like 2008 again. I don't really see it getting like 2008, but then there's also theories out there that we're going to have something worse than 2008, which really wouldn't be surprised, honestly. BBY analysis is I will not be trading BBY. I really have zero analysis on BBY. ATVI, I'll take a look. So cup and handle on the weekly chart. Ooh. There's really no cup and handle on the weekly chart. Yeah, I see 0 cup and handle there. Because if this is the cup, I mean the cup starts here, which means the cup would have to go all the way back up to here before it's even a cup. So in reality, ATVI would have to go all the way to 84.68 for that weekly chart to create a cup. So there is no cup there. Maybe a daily chart. No daily chart. But yeah, I could see this turning into, I mean, this is just kind of decreasing. But yeah, I could see a bounce. You can see there's a strong buy volume, buyer's candle, and this is sort of like a bull flag. This is more or less a bull flag right here. Trying to be, at least. So if that can start breaking up and over that kind of channel, then there could be a long play to be made there. We also just got a golden cross right here. Yeah, that's a golden cross. That could signify that you're going to start resuming back into an uptrend as you got in a golden cross. So this is probably worth watching long bias, yes. Do you consider a push on UGAS? Not particularly. No, I don't really look at UGAS very often, or DGAS. I mean, UGAS and DGAS really don't move. I mean, UGAS doesn't really move that much on the day. I mean, it's a $15 or $13 ETF. It's really not into any support yet. I mean, you can argue that in the wintertime, this should increase a little bit because it's a seasonal type play because of natural gas, right? More people use natural gas in the winter, heat up homes and things like that. So yeah, I mean, you can argue that during the wintertime, you might see prices increase on this, but do I necessarily see a big move coming? No, not particularly, but you could expect that you'll see somewhat of a bounce play or a small intermediate bounce come as the price gets down towards $12 to $10.79, $10.50. I wouldn't necessarily be concerned with the recent SPY drop. What I'd be concerned about is why other countries have been buying gold in numbers never seen before. I would be concerned the fact that the markets has been failing to break into new highs for so long. I'd be concerned about the $22 trillion in debt. I'd be concerned about the banks getting bailed out by the Federal Reserve. I'd be concerned about the Federal Reserve continuously dropping interest rates almost back down to basically zero, so that if we go through if we do go through recession, interest rate cuts will not help prop the market up because we're already so low. You'd have to go into negative interest rates. I'd be very, very concerned if see what I'm getting at? So it's not the SPY drop that I'm concerned about. The SPY will move according to what's been going on. And what's been going on is other countries have been buying gold like crazy. The Federal Reserve has already been bailing out the banks. The Federal Reserve is dropping interest rates on a supposedly really strong economy, which there'd be no reason to drop interest rates on a really strong economy unless it was to combat inflation, but I highly doubt that's the case. They're really just trying to keep the market going. They've even said in their press releases that they're going to do everything they can possibly do within their power to keep the economic expansion going, which basically just means that I am going to artificially do everything in my power to keep something going, even if it shouldn't continue to go. So sure, I may have stolen my brother's wallet and took all of his money out of it, and he pretty much knows I did it, but I'm going to continue lying about it, even though I know he knows, for as long as I possibly can until all else fails. That's what they're saying to you. So it's not the SPY drop I'm worried about. It's all the other things surrounding the market that make me worried. Honestly, I'm not even going to put a projection on. There's no point to putting a projection on a bear market. Just not even. I mean, all I know is it's coming, right? We've been in, that's just it. This bear market is coming. You just prepare. That's just all you do. You just prepare for a bear market, right? You're trying to pick it and time it exactly perfect. It's just not going to happen. I thought we'd have one in 2018. We didn't get it. We just got a massive, big correction, and I thought that would have been the start. Granted, it wasn't. Yet, you can also argue that everyone that's been a long-term bull saying we're not going to go through a correction has also been wrong, because they haven't really gone anywhere for the past 2 years. They've all stayed below like the 300 mark, 3,000, right, on the SPY. So even the bulls haven't been able to predict a continuous bull run for 2 years. So it goes both ways, sure. But I mean, at this point, I'm not even predicting. I'm just preparing. Yeah, that's another thing to take a look at, KM. I haven't done that in a while, but something else to take a look at, guys, is go look at all your Dow Jones, look at your S&P 500 stocks, look at, your small cap stocks, look at your large cap or mid cap stocks, and look at their daily chart and see how many of them are having death crosses. If they're having a lot of death crosses, that's a good sign the market's going to roll over. For example, back in 2018, just before we got the big Christmas correction, I mean, I don't want to say I predicted it, but I mean, I foreseen a drop coming. I mean, because I did my research. I did what most people wouldn't do. I started going through every single Dow Jones stock. I started running through hundreds of the S&P. I would literally just sit there and just type in tickers. 30, 40, 50, 60, 100, 200, 300, just like that. Look at the chart. That's all I did. Just typing in tickers and looking at their charts. And I could come to find that like 70%. Well, it was like 70, 80% of all the Dow Jones stocks were in bear market in terms of just their own charts, or they're in bear movements from death crosses, so they would probably continue down. And then I started looking at S&P 500 stocks, and many of them were having death crosses, meaning a big move down would be coming on those stocks, and that would drag the overall market. And I even made a video. I'm like, 80% of all the Dow Jones stocks are in bear market territory. And maybe got a couple thousand views, and then next thing you know, 2018 rolls around to December, and bam! Get smoked. Death cross and golden cross are on yearly charts. Death cross to the downside, bear golden cross to the upside. So what do you think it is money funneled in property? So yeah, what you have to understand, just look up quantitative easing, right? And so this is a big argument. Pretty much whenever, so here's a good one, is when everybody wants to bring up politics and it's like, well, President Trump does this bad, and then Obama did this good. And so here's a big argument that you're going to hear it. People always want to tie a president to the stock market, and I really wish people would stop doing that. And then I also really wish that President Trump would stop glorifying himself on the stock market doing so well, because for one, it hasn't really done that well for about half the time he's been president, and no president should ever glorify him on the fact that the market's doing well. It's just not something you do, and there's many reasons why. So for one, anybody who gives credit to Obama for a great stock market, for one, stop. You don't know anything. Obama had nothing to do with the market performing very well. See, what happened is Obama, for example, stepped in as president at the bottom of one of the biggest recessions we had pretty much ever in history. So he basically came in right at the low. He took in as presidency at the perfect time to be buying the market. So he took in presidency as all investors were ready and willing to buy up all the financial securities at dramatically cheap prices. So he basically got in right at the beginning of an uptrend, luckily. And then the Federal Reserve decided they were going to do quantitative easing. Remember that the Federal Reserve and the United States government, or to say the president and the Federal Reserve, they're completely separate. Really, the president is supposed to have no sway or pull over what the Federal Reserve does. The Federal Reserve is supposed to act in the interest of the American citizens, and are supposed to act solely based on the information that they're provided from economic data, completely separate from the politics side, right? So they decide they're going to do quantitative easing. Quantitative easing basically means they're going to funnel money into the market. They're going to print money, buy financial securities to help kickstart the economy and get it moving. They were doing financial easing or quantitative easing all the way up until about 2 years ago, or maybe like a year and a half ago with President Trump. So from 2008 to 2018, to basically 10 years, the Federal Reserve was just injecting money into the financial markets to keep them moving. So yeah, after you put trillions of dollars in the market, you'd expect that it'd probably go on a nice run, right? So again, Obama had nothing to do with the bull run. Sure, there's some things they may have done that could have added to it, but the main thing was that we went through recession, perfect time to buy, and then as the market kept cruising on, we were just continuously injecting money into the market. Now the Federal Reserve stopped quantitative easing, and they actually went into a form of quantitative tightening during like the second 2 years of President Trump's presidency, right? So first 2 years of it, they're still doing quantitative easing, and the market goes on a nice rip. Past 2 years, they basically stop and go into quantitative tightening, and then we've gone into a rally, just back and forth. So again, a lot of it has to come down with economic policy from the Federal Reserve. Yeah, and yeah, think about that. Yeah, 10 years of 0% interest rate. Of course, the economy is supposed to be booming, right? I mean, when companies can borrow somebody else's money for 0%, it is free money. I mean, everything that's happened over the past 10 years has lined us up for a massive bull run. I mean, it was just, so yeah. Anyways, with that being said, so all in all, I mean, I'm just being straightforward here, guys. There is really no stocks that I've liked today. None. I mean, maybe by the time I get off here and then go and actually kind of redo some research for the morning, there might be something I find that I like. But there's really nothing that I've liked so far this morning that have really caught my eye. And I didn't really mean to get into too much political side there, but I just wanted to give you guys some context and some background so that you don't find yourself in one of those stupid political arguments trying to claim glory for a president over the stock market, because they really they don't do too much a lot of times for the stock market. They're just kind of this little thing. They're just this little person in a big board game. That's all they are. That's a good one. What is negative? What about negative interest rates? What's up with that? So negative interest rates, it's a possibility we could get there. Everybody thinks that, and remember, mind you, I don't know where you guys live. I know where I live, and that's in the United States. But when living in the United States, everybody creates this fantasy in their head that just because this is the United States of America, that we're like in this bubble and we're shielded from all the problems that we see in the outside in every other country, right? Negative interest rates in other country. Venezuela economy collapsing, people starving to death, people can't get gas, they can't get water, they can't get anything, mind you, under socialist democratic governments, okay? And then you have places like Zimbabwe, their economy clashes, money goes into hyperinflation, right? No one could afford anything. Same thing with Venezuela. They went in hyperinflation. So there's a lot of these things that happen in other places, and we just never think that it can happen here because for whatever reason, this is the United States. And it just, so for some reason, it's like the United States always feels to be in this little bubble that just can't be touched, when in reality, it's incorrect. Everything that's happened anywhere else can very well happen right at home, and it will, if we continue being an uneducated country, it will happen. So anyways, with that out of the way, negative interest rates would basically be where instead of banks charging you money to take out a loan, they'll actually pay you money to take out a loan. So the question would be, why would anybody want Why would a bank ever pay you money to take out a loan? How is that even, right? How does that make sense? Why, if banks are meant to make money off of giving people loans, why on earth would they give you a loan and then also pay you money to take out a loan? Does anybody have the answer? Nobody's the answer. Why would a bank go from charging you money, making money off of you, to giving you a loan and paying you money? Yep, exactly, Mike. It's to stimulate the economy, because nobody wants to borrow. If things are that bad, right, and interest rates even go to negative, that is a way for them to incentivize borrowers to come get money so they can use that money to buy a house, start a business, do whatever they want with the money to try and get the money back into the economy, start buying property, start buying assets, create businesses, create jobs to get this thing moving. That's the goal of the negative interest rate. And then there's also some other things in there, but that is one of the main things. Yes, a lot of things going on there. So now the next thing you ask yourself, well, history has proven, right? History has also proven, guys, that it usually takes brain farting. I can't remember now. I think it usually takes four to five full 1 point basis. I'm saying this backwards. Yeah. So let me put it this way. If we had gone into a recession, or maybe even a depression or crash or something, it usually takes 4 or 5 full basis point cuts to interest rates to get enough people wanting to borrow money and to get the economy kind of back on track. It usually takes about 5% interest rate cut. I can't remember what we're at today. I haven't looked. I could find it. I know we're probably at like 2, maybe we're at 2% interest rates, or 2.5 or 1.7. I honestly forgot off the top of my head. So let's just say we went into a recession mode and we're trying to dig ourselves out of it. A lot of times the Federal Reserve has to cut interest rates by 4 to 5% full basis points. So going from 2%, do a 5% decrease, you're going to put yourself at negative 3% interest rates. If we kept cutting all the way down to 0% interest rate, and then we went into a recession, and then they had to do 5% interest rate cut, or 5 basis, you'd be at 5% negative interest rate. So a lot of crazy talk that we just talked about. So don't get too worried, but look into interest rates, look into quantitative easing, quantitative tightening, Federal Reserve, look into the BEP, which is the Bureau of Engraving and Printing. They're the ones in charge of printing money. Keep your eyes on gold and silver. I mean, lots of things like that. Yeah, it was something around there. But anyways, all right, guys, got to get back to our private group. I appreciate you guys tuning in, as always. Later today, I'll do a video on the technical analysis of the SPY and maybe the Dow Jones and the NASDAQ. As I said, at the end of each month, I'll probably be doing this from now on, so you have another video coming on that. I think I'm also going to just do a video kind of showing people that TD Ameritrade is now free for commission, and also kind of give my talking points on it as to why it's so awesome and things to consider while trading now, because once the commissions have changed, the trading game has now changed in a big way for a lot of people, and I don't know if most people know it yet. But anyways, with that being said, till next time, guys, everybody take care and have a good day.